Thank you very much, Mr. Chairman, for your introduction, and thank you for the invitation to be here with you today. I'm very privileged to be here. The subject which I was asked to speak about was China's outward investment and outward investment policy. This is an area which I've been doing some work on in recent years, and as you've said, China has changed enormously. Obviously, for many, many years, China has been the recipient of very large amounts of inward investment. And in the last few years, we've seen the emergence of China as a significant investor in other parts of the world. This is a relatively new development. So what I'd like to do today is to just give a little bit of background without going into a lot of detail on specific areas like Africa or specific sectors, but to give some background on China's policy on outward investment and some of the developments that have been taking place. And then perhaps if there's any discussion, any questions afterwards, we can talk in a little bit more detail about specific issues. So, as we know from many, many reasons, China's investment in the outside world has been attracting a lot of attention. We've seen positive reactions to this. We've seen a lot of negative reactions to China's outward investment, particularly with regard to investment in Africa. I mean, I won't talk too much about that, but certainly this is one of the areas where in Europe we've seen a lot of questioning of what really China is doing in Africa and why it's doing it and what the impacts will be. We know that China's investment out in the outside world has grown a lot, but obviously there's been a crisis that we all know about in the last year or so. What kind of implications does that have for China's outward investment? And just looking more specifically at Europe, since we are in Europe, where is Europe on the Chinese investment map, and what can we in Europe expect from Chinese investment? So these are maybe some of the questions that we can think about today. I'm sure probably a lot of you have seen this kind of figure on China's outward investment. These are the Chinese figures from the Ministry of Commerce. You can look at figures also you see figures from UNCTAD, for instance, which are basically the same statistics. So you see that from the this covers the period 1990 to 2008. During the 1990s, China's outward investment was running along at about $2 billion a year, which is absolutely insignificant in global terms. You had this little bump up around about 2001, but then you've seen this massive increase basically from about the period 2004 up until 2008. So I quote the figure there. In 2008, total outward investment was $55 billion. In 2004, it was $5.5 billion. So 10 times in a period of 5 years. Though, if we look at it in global terms, yes, $55 billion is a big outflow. It compares with a lot of major investors in the world. But if we look, for instance, at China's stock of outward investment, it's still relatively small. It's not much bigger than, for instance, places like Singapore, or it's as a stock of investment, it's still absolutely small compared to, for instance, European countries like France, the UK, the Netherlands, and so on. It's in some respects, yes, it's big, but we need to perhaps keep it in perspective that it's not as big as a lot of you might expect it to be from some of the coverage that you see in the media. I don't want to perhaps go into a lot of detail about this today, but one of the reasons why China's outward investment has increased over the last few years is that there has been a very significant change in Chinese policy on its outward investment. And as we know, from the 1980s onwards, one of the primary aims of Chinese policy in terms of the outside world was to attract inward investment, and China's been, relatively speaking, very successful in doing this. For many years, one of the fundamental tenets of China's macroeconomic policy was the need to attract and to conserve foreign exchange. And so there were very strict restrictions on outward investment. There was a little investment in the outside world in the 1980s. But really, it was in the 1990s that China began to build up what you could call a regulatory regime for outward investment. And it basically involved very strict approval procedures for outward investment, which had to go to the approval of outward investment had to go to the very highest level in the Chinese government, and very strict controls on the use of foreign exchange for outward investment. So there was a policy which really restricted outward investment. But then in the late 1980s, this began to change. There was initial discussion of what this term that you see a lot today, which is the idea of going global, the go global policy, which began to be discussed in the late 1990s. This idea of the go global policy became official policy really with it was included in the 10th five-year plan from 2000 2001. The go global. Sometimes people really believe that the go global policy is only about outward investment. In fact, this isn't true. There are other elements to the go global policy, but certainly outward investment has been a significant part of that policy. So the idea really was to encourage Chinese enterprises to go outside China, to invest outside China. That was one of the main elements of the idea of go global policy. And really, from the initiation of this go global policy, we've seen an almost a complete reversal of China's policy on outward investment. So what we've seen is the removal of a lot of the approval restrictions that existed for outward investment. So it's now much easier to get approval. The levels of government where approval takes place have been brought down from the central government to much more local government. Provincial governments now have much greater power to approve investment policy, investment projects. And we've seen the removal of a lot of the foreign exchange restrictions on outward investment. And at the same time, what we've also seen is the adoption of positive incentives for outward investment. I won't talk in detail about this, but we see now clear incentives that the Chinese government has adopted to encourage outward investment. So really you can argue that since 2001, there has been a very clear change in the Chinese view of outward investment. You see a lot of discussion about what are the aims. You see a lot of discussion about the idea that Chinese investment is either politically or strategically motivated by government policy. Certainly, the Chinese government has quite clear ideas of where it would like to see investment, channeled. Whether this government policy really is paid a lot of attention to in China is another matter. I mean, there's a lot of people who argue that, in fact, the government policy doesn't necessarily have a lot of effect on investment decisions by Chinese companies. But these as part of the policy, China has said, well, there are certain sectors where we would encourage investment, and you can see that these are quite clearly certain areas where we do see Chinese investment. Raw materials, energy, where China lacks resources, stimulation of exports, and basically R&D and technology. So these very broadly are the goals of the policy in terms of where China would like to see investment taking place. Now, I would argue that, in fact, increasingly, yes, there may be, in some cases, particularly major state-owned enterprises where you do see a close correlation between Chinese government investment policy and the investment decisions that are made by China, the enterprises. But increasingly what is taking place is that there's diversification of investment away from these major state-owned enterprises, and increasingly investments are being made on essentially business or commercial grounds rather than some sort of strategic design to dominate the world, which some people believe that China has. This is a listing of the particular encouraged sectors. I won't really spend any time on that, but you can see this is where China is looking to encourage investment. So it covers agriculture, natural resources, manufacturing and services. So a very broad range of areas where certainly the Chinese government believes its companies should be investing. Where does Chinese investment come from? It's certainly true that if we look at the total investment from China and the amount of investment, then still the investment is very much dominated by the major state-owned enterprises, the ones that very often you see in the media headlines, investing in oil fields or investing in mining operations in Australia or wherever it may be. Almost 3/4 of the investment, this is the stock of investment at the end of 2008. Again, this is MOFCOM, Ministry of Commerce statistics, comes from state-owned enterprises. So, yeah, state-owned enterprises dominate. I did a little bit of research on the MOFCOM produces a list of the leading enterprises investing outside China, and I did a little bit of research on trying to track down. Sometimes it's a little bit difficult with Chinese enterprises to find out who exactly owns them, even if they are listed on stock exchanges. But you can see that this is, well, the list is the top 40, but you can see that it's very much dominated by state-owned enterprises. SASAC is the state-owned assets Supervision and Administration Commission, which is the body under the central government, which is responsible. It's basically responsible for holding and overseeing state-owned assets at the central government level. So you can see that on this list you have a lot of state-owned enterprises under the central government control, and very often even the ones that aren't under central government control are in fact local state-owned enterprises at the provincial or lower level. And even sometimes Legend Holdings, for those of you who don't know, is in fact Lenovo, who acquired the IBM PC business a few years ago. And even those that sometimes are perceived to be not necessarily state-owned, in fact, they might have a strong state element in their ownership somewhere. So the state, if you, The state, if you look at this list, as you see, there are virtually no private companies in that leading list. This is looking at it from a slightly different aspect. The percentage of outward investment from the share of central and local government level. You can see that, well, it fluctuates. But generally the state, the central government dominates outward investment from China. Nevertheless, there are changes that are taking place, and perhaps I would argue, there are a lot of question marks surrounding China's statistics on outward investment. A lot of people question their accuracy for a number of reasons. If we look at the official statistics, we can see that of where outward investment is coming from at the provincial level. We can see that, for instance, well, Guangdong obviously is a leading source of outward investment at the provincial level. That's not surprising given the role of Guangdong enterprises in trade, processing for outward investment, for export and so on. Then you have a few others. Particularly interesting cases are like Jiangsu and Zhejiang, which are obviously neighboring Shanghai. The Yangtze River Delta has been booming in the last few years. And we've seen a growing amount of investment coming particularly from Zhejiang. Our investors from Zhejiang have been very, very active. And I would argue if there's one of the inaccuracies of China's outward investment statistics, certainly is that probably they don't capture everything that goes on at the local level by small companies. I'm sure that there are very large amounts of investment that go from China that just is not reported to MOFCOM. So I would suspect that, in fact, there is a lot coming from small companies, small investments, particularly in countries neighboring China, that is simply never reported to the authorities in China. So I think the picture is certainly changing, and we will certainly see a lot more coming from smaller provincial non-state enterprises. I saw a report just recently. It's an amusing case. We read a lot of in the last few weeks about Dubai and the problems of Dubai, and certainly in the UK, all these people who unfortunately invested in real estate in Dubai, and now it's all going down the tubes. I was just reading a report in the Chinese press recently saying that from one city in Zhejiang, Wenzhou, which some of you may know, which is one of the is extremely dynamic in terms of trade and investment and so on, that private investors from Wenzhou had invested the equivalent of around about 5 billion renminbi, which is around 500 million euros in real estate in Dubai. And they supposedly were looking at significant losses on their investment in real estate in Dubai. But I'm sure that a lot, and that's one city in Zhejiang province with 5 billion renminbi, 500 million euros in Dubai. And I'm sure that most of that investment in real estate in Dubai has never been reported to the authorities in China. So I'm sure that there's a lot that's happening that simply is not covered. If you look at the statistics in terms of the official statistics in terms of the number of enterprises, then you see that in fact state-owned enterprises are a much, much smaller share than if you look at the amount of investment. So there is an increasing diversity in terms of the source of investment. Where does the investment go? Again, these are the MOFCOM statistics. certainly, if you read a lot of the Chinese, a lot of the media, then it focuses very much on investment in resources, energy, and so on. If you look at the official statistics, I know it may be a little bit difficult to see from where some of you are sitting, but in fact, certainly according to these official statistics, then investment in resource extraction is a relatively small percentage of the total. This is stock of investment at the end of 2008. You see a lot in, for instance, transport. You've got companies like Costco, which are investing in a very big way in port facilities throughout the world. You've got quite a lot in things like wholesale retailing, distribution networks, and a fairly significant amount in manufacturing. One of the reasons why you have black holes to some extent in Chinese statistics, if you look here, you see there's quite a large. It's this brown one, sort of up to the left, brownish, purplish one up to the left, which is leasing and business services. This is not because, in fact, Chinese companies are investing in accounting or whatever services companies in the outside world. It's in fact because they are a lot of Chinese companies, when they go abroad, they set up a holding company in somewhere like the Caymans or the British Virgin Islands or whatever. And so for statistical purposes, this goes under leasing and business services. But of course, we don't really know then what happens to the investment or where it really goes. So that this is another reason why you see some problems with Chinese statistics, or it's difficult to really know what's going on. This is just very. This is very quickly as China, the leading destinations of China's outward investment for 2008. This is the flow for 2008. So you can see there Hong Kong up there up at the top. South Africa. South Africa is not normally one of the leading destinations, but there was a major acquisition of a bank in South Africa, which in 2008, which pushed up South Africa. And then you see the BVI, Australia, Singapore, the Cayman Islands. Chinese companies love their tax havens. And this is another reason why sometimes it's really difficult to know what happens to Chinese outward investment, because they really very often use tax havens to. And the same with Hong Kong. A lot of this money that goes to Hong Kong doesn't necessarily stay in Hong Kong. It may go to other parts of the world. There's also, the same as with inward investment. One of the big questions about inward investment statistics in China is the question of round-tripping, money that goes from China and then is brought back into China. There is an assumption that maybe roughly 20% of China's outward investment, in fact, really goes back into China. But nobody really knows, and certainly in the case of Hong Kong, that might be true. But if you look for Europe, for instance, in this list, then quite honestly, you don't see Europe figuring very highly. You see quite a lot. If you Kazakhstan, the US, Russia, Pakistan, Zambia in Africa, Cambodia, Germany. Germany is the leading destination in Europe for Chinese investment. Indonesia, Nigeria, United Arab Emirates, which of course includes Dubai. So maybe some of those property investments are included in the official statistics, and Vietnam. So certainly, Asia figures very strongly. Some parts of Africa, some parts of Europe, North America. But Europe certainly doesn't figure very highly. However, we try and massage the figures or analyze the figures, either from the Chinese point of view or from the European point of view. There hasn't been, generally speaking, a lot of investment by Chinese companies in Europe. This is looking from the Chinese point of view. You can see Well, Germany, over the last few years, has received relatively significant amounts of investment from China. The UK, but then even if you look at major economies in Europe like France and Italy, then they are certainly from these figures not very big. And of course there are a few well-known examples of investment in Europe. We've seen Haier, the consumer goods electronics manufacturer that took over the color television business of Thomson in France, and also the mobile phone manufacturing business of Thomson Alcatel in France. So there have been one or two significant investments in Europe, but generally it's been relatively small scale, with no clear focus in terms of the sector or in terms of the country, the destination countries. I haven't included all the 27 members of the EU there, but in some of them it really is apparently zero. Looking at more recent developments, and I'm trying to just fill out a little bit of the background. I recently came across an interesting. Well, it's quite. There have been efforts from the outside world to try and study, analyze some of the motivations, where Chinese investment goes, why it goes, where it goes, and so on. And there are, but it's. I would argue that there's been very few really convincing explanations of what is going on. But this, just to sort of flesh out a little bit some of the official statistics, was a survey which I came across recently, which was done by the CCPIT, which is a China, whatever it is, for the promotion of international trade, China Council for the Promotion of International Trade. And they did a survey which was published a few months ago of about 1,000 Chinese companies, of investment activities, investment intentions, and so on. And it gives some interesting, I think it does give, to some extent, some flesh to some of the rather thin bones of the more official statistics. If you look at the size of the investment, certainly again, some of the perception in the outside world is we see the headlines of these, huge investments in the resource industries, and so on. But if we look at these survey results, we see that nearly half of investments by the respondents here were of less than $1 million US, and a very small percentage are over $100 million. So apparently we're talking about a lot of small investments rather than a small number of large investments. The sector of investment, the respondents, you see, well, manufacturing is the largest sector. Resources, natural resource extraction is, not that big in terms of the number of companies active in the area, in the sectors. The location of investments, where were people locating? To some extent, this matches the official statistics. You see, roughly 60% of the companies active in outward investment are investing in East Asia and Southeast Asia. Then you have about 20% in Africa, Western Europe, North America, about 15% in Middle East, 15% in Eastern Europe, and about 10% in Latin America and Oceania. The reasons for the investment, people have tried to theorize in terms of business theory why China's investment is taking place and what are the reasons behind it. A lot of it is very similar to what you would see Western companies doing, what their justifications for investment, expanding markets, accessing advanced technology, reducing costs, natural resources is there. Um, um, uh, acquiring brands, and this is one of the reasons why you see quite often Chinese companies investing outside China. There's a recognition, certainly in China. Again, we have this perception outside China that China is investing because it's strong. In fact, a lot of the reasons why Chinese companies invest is not because they're strong, but in fact because they're weak. And yes, there's a Chinese government policy to invest outside China, but when Chinese companies invest, when they look at their position in the world, they lack technology, they lack management know-how, they lack brand recognition, and so on. And so very often when they're investing outside China, particularly when they're acquiring companies outside China, in fact what they're doing is trying to make up for their weaknesses rather than to exploit their strengths. So this is why you see, Lenovo acquiring the IBM PC brand, although in fact in this case there's a limit to the period of time when they can use the IBM brand. But when they're acquiring the Thomson television brand, it is because of the brand name. When they try to acquire Whirlpool, try to acquire Whirlpool in the United States, obviously one of the main reasons is because of the Whirlpool brand name. In that case, they failed. This is the CCPIT survey. What is their view of their investment? Well, there's a relatively small percentage who say that they're very satisfied. A very high percentage who say that they're basically satisfied. I'm not sure if that's really a ringing endorsement of their view of their success in China. When Chinese companies say that, well, we're basically satisfied. In China, if a Chinese official gives a talk and he says, well, the situation is basically good, in fact, that means that it's not really that good at all. So when Chinese companies say they're basically satisfied, I'm not sure. It's not really a ringing endorsement of their satisfaction. The survey did include questions about the impact of the crisis. And so you can see, quite a lot said it had some impact or a major impact. We'd assume here that it's, a negative impact rather than a positive impact. Chinese companies, certainly their view of the outside world and investment was affected by the crisis. What were their investment intentions? Well, you see here a very small percentage who are planning a significant increase, quite a large number, a moderate increase, and quite a large number also that had no intention at all to invest outside China. And again, the size of the intended investment, generally very small investments. And again, looking at what were the reasons for their future investment, very similar to the reasons given for their previous investment, and intended locations of investment, again, very similar to the previous investments. Focus on Asia, some intention to invest in Europe, but not a lot. Africa, North America, but pretty much sticking to where they have been investing in the past. And they were asked to specify what were their intended locations by country, and you can see that in fact, Vietnam is up there, number 1, Hong Kong, Macau is number 2, the US number 3, Australia, Thailand, Canada. Then you have Germany as the leading country in Europe down there at with 12%. So again, Europe doesn't figure necessarily very highly on planned investment. And they were also asked to assess the openness of investment, the investment locations. Obviously, there are a lot of European countries, European governments that are trying to attract investment, and they do try to attract Chinese investment. Perceptions in China of investment in Europe are certainly, well, there are positive perceptions, but there are certainly perceptions that investment in China, in Europe, is not easy, that there are problems with investing in Europe for a number of reasons. Maybe we can talk about that in more detail. And to some extent, this is borne out by the results of the survey. They were asked to rank on a scale of 5 the openness of destination economies, and you see US and Canada are up there at number 1. The leading European economies are Germany and the UK. They weren't. They haven't broken it down by a lot of individual companies. Then you have other Western European, which doesn't rank very, very highly. You've got France, which is also ranked quite highly. So if you look at this, certainly from the perception of from China, then yes, Europe may insist that it's open for investment, but the perception from China is maybe that yes, well, it's not that open for Europe. It's not that it's for investment. It's not that welcoming to Chinese investment compared to, for instance, the US. And this is despite the experience of apparently Chinese companies in the US where there have been major cases of investments by Chinese companies like CNOOC and their attempted acquisition of Unocal in the United States, which was shot down for basically political reasons. And there have been other cases where Chinese investment in the United States has been prevented for national security reasons, and there have been other high-profile failures, like the higher attempt to acquire Whirlpool, which wasn't for political or policy reasons, was basically because it was outbid by a competitor. But there have been very high-profile failures of Chinese investment in the United States. There have been no equivalent high-profile failures in Europe, but apparently their perception of Europe is that it's less open than the United States, despite this. Just to summarize very briefly on the existing situation. What happened as a result of the crisis? So, there have been Chinese statistics which have been reported which suggest that in the first part of this year, certainly there was a very significant fall in China's outward investment by roughly 60% in the first half of 2009. But apparently this has recovered because in the first 3 quarters of 2009, certainly in the non-financial sectors, it was roughly equivalent, the outward investment was roughly equivalent to what it had been in the first 3 quarters of 2008. So apparently there was a big fall and then there's been a recovery. And we've seen some very high-profile investments in the last few months, or certainly proposed investments in the last few months from China. In 2009, there was a significant relaxation again of China's regulations on outward investment, making it even more easy for investment to take place. We see a lot of discussion in China of whether the crisis is an opportunity or not. I mean, there's assumption again outside China sometimes that China sees the crisis as a big opportunity, and they're just grabbing everything that is available because it's cheap. There's a lot of discussion in China, in policy circles, in the media, from business management about whether this is really an opportunity or whether there are greater risks attached to investment outside China in in this period of crisis, and certainly from the Chinese point of view, it's not as clear-cut as sometimes we believe it to be. There are a lot of people who argue that, in fact, there are considerable risks. And there's a lot of discussion. There's a realization that there's been a lot of failures in China's outward investment for a number of reasons. Some I've already mentioned. Chinese companies don't have the management know-how they don't have the cultural awareness to deal with acquisitions or operating outside of China. Many reasons, and you see a lot of this discussion taking place in China. I would argue that certainly there is an increasing diversity in investment outside China, and that this diversity will continue. In Europe, I think we'll see small-scale investment will continue. It may grow, and we will see some large-scale opportunistic investment like Geely and their bid for Volvo. When they see an opportunity which they believe makes sense, like this case, then you will see this kind of high-profile investment. As I say, in China, certainly, perceived from the outside, there is a lot of discussion about whether this kind of investment makes sense. Can Chinese companies integrate investments outside China into their operations? The past record has been certainly very mixed, and I think a fundamental question is, we assume that Chinese companies, when they invest or when they acquire what are perceived to be failing companies like Volvo, does this make sense even for a Chinese company there's a reason why these companies are failing, and does it make sense for Chinese companies to invest in a failing company, especially if they don't have the management capacity even to deal necessarily with the acquisition of a successful company, let alone a failing company. And what will happen to Chinese investment in these kind of cases if there is a recovery in the outside world, and there are no longer these opportunistic investments available? Will Chinese companies withdraw or reduce their investment, or will they have to invest in other types of targets? So those are really just a few very broad questions to conclude with. So I'll stop there. I've gone way over my originally allotted time, but I'll leave open questions or discussion. Thank you very much.